If you want to be a millionaire, start an airline with $1 billion. Now that's a famous quote by Sir Richard Branson, and he's qualified to make that because he started Virgin Airlines, correct? And I know I've been giving SIA a lot of shit, but today I'll be sharing with you new operating numbers to see if there's any green shoots sprouting from the ground. So let's look at August 2021 operating results, and do keep in mind, SIA actually publishes it monthly to really help investors get up to speed to the latest figures. And if we read together, you realize that passenger capacity remains steady at 32%. This is how much they are flying. No reason to increase this in my opinion. But the good part is passenger traffic has grown by 7.4%. As a result, the group registered a higher passenger load factor of 17.5%, which is up 1.2 percentage points from the prior month. So where are the sprouts really coming from? You realize that America, West Asia and Africa, Europe has been clocking increased passenger loads. And now we do know that right now Germany has opened a green lane for Singapore travelers, correct? And I do know a story of someone actually flying there right away. Very gung-ho. I have kids, so I can't imagine taking a quick trip to Germany where we don't know what's the COVID situation over there. I'm a bit more kiasi. But let's move back to operating numbers. SI Cargo registered a monthly cargo load factor of 87.6%. That's 5.6 percentage points up from the prior year. That's good, but what we want to see is month-to-month comparison. And I actually look at July, it was slightly lower. And where the gain is coming from is again from Americas, West Asia and Africa, Europe. I think East Asia is China. And in my opinion, China remains fairly slow in opening up to global trade. So the key part is to actually think of the qualitative factors, correct? And I have a few points prepared for you today. And if you're keen to find out, continue watching on. Hi guys, welcome back. Without further ado, let's dive on to the first point, which is this. SIA moving forward will be using current fuel prices. In the past, they've been getting a lot of criticism because they've been hedging fuel prices. And it always seems that when they hedge, the fuel price drops. So they have, again, losses from hedging. And after all this criticism, moving forward, they'll be using current oil prices. And we all believe that green energy would slowly take over oil price. So maybe that's good moving forward also. So this is something that's confirmed by chairman. Moving forward, they'll not be doing too much of fuel hedge. If you see this graph over here, you realize that fuel hedging losses have always been coming up here and there. Point number 2, the passenger load factor has been increasing but very, very slowly. Now, as we've discussed at the start of the video, 17.5% is the passenger load factor. And just to share with you, SIA used to clock like 80+% in terms of passenger load factor. And from my memory, it takes about 70% for an airline to become profitable. So it's still a long way from that. SIA back in the good heydays used to clock a lot of traffic from China and US. So from this graph, you can see that they are already opening up the borders very gradually. Of course, this is because COVID is still not resolved, even though we have vaccinations. And moving forward, hopefully we have more green lanes established with different countries, like the one we've done with Germany recently. I see in forums, a lot of people are itching to go to Taiwan. So if you're keen on Taiwan also, leave in the comment section. For myself and my family, I think we miss Japan the most. Point number 3, SIA's losses have been narrowing. And as of last quarter, they've narrowed it to $409 million. And if we project for this quarter, with passenger load increasing slightly, I guess that number will be less than 400 million, but still a sizable amount. Management has communicated before that the monthly losses look to be around the range of $100 to $150 million, simply because there's so much fixed cost that's in the books. And this could still persist for a while. If you look at the forecast by UOB Kay Hian in this report, you realize that they're only forecasting profits to come in only in 2023. Vaccines have been distributed all around the world. I'm getting a little bit concerned whether we can really turn to profit in 2023 now, because air flights really are still taking such a long time to recover. Which leads to the next question you may have. Will SIA run out of capital again? I think in the previous video I've shared that is quite unlikely. If you look at this summary table, they have additional liquidity raised since 1st April 2020 of $21.6 billion. So the amount they have looks to me at least to be really sufficient. And that means a few things to me. The first is that the retail bond looks to me to be in good shape. The second is that the odds of SIA needing more rights shares and mandatory convertible bonds are pretty slim. They've raised their share capital base back in 2019 from 1.2 billion to right now 2.9 billion in terms of outstanding shares. So many investors look at the price right now is $4 plus $5 and compare it to $9. But the share base is very different. Last time it was 1.2 billion in shares, now it's 2.9 billion. So very, very diluted. So hopefully all the dilution has passed already. Moving forward, it's just waiting for profits to come. Point number 4 is good news. And before I get there, inviting you to smash the like button early. It's taking our team hours to prepare this presentation for you. Point number 4 is actually cargo, and cargo demand looks to be strong. More importantly to me, it seems to have even further rooms to grow. Now, part of the pandemic plan for SIA was to convert their passenger aircraft, because it's not used, correct, to cargo aircraft. And how it looks is something like this. Overall, air freight demand looks to be healthy. And from what I understand from the shipping industry, the rates have gone through the roof. The demand there is strong. And naturally, there could be some spillover from the shipping all the way to sending it by air. So if this could grow, two things could happen. First, SIA could rely more and more on cargo, because right now it's contributing already half of the revenue. If usage rate increase and what it can charge to customers increase, naturally this segment could even grow further. The other point is regarding SATS, a sister company of SIA. SATS actually has a monopoly in terms of cargo handling in Singapore. That is why this information could benefit them also. And if you're looking to learn more about SATS, you can check a previous video, I'll leave links below, or go for investment course where I teach the basics of investing. If you've always wondered why you are getting poor results from your own stock investing, check out this course. I've actually prepared material inside to help you do proper analysis so that you know how to invest better. And since you stayed here, I've actually a bonus for you, which touches on the pros and cons of investing in SIA right now. I'll start with the cons first, of course. Cons for SIA is that SIA does not have a domestic market, unlike its counterparties in China and US. And a good point of comparison could be actually Southwest Airlines. Southwest Airlines is a business case study that I've seen when I was back in the school days. And if you look at Southwest Airlines, you realize that the share price reflects a well-run company. They are the only US airline that has an investment grade rating. So if you believe airlines are good to invest in, why not consider Southwest Airlines instead of just SIA? You can always access Southwest Airlines through low-cost brokerages. Then what about for pros? The pros to me is quite clearly this factor, that SIA carries the Singapore brand. And every indication from its parent company Temasek suggests that they are committed to really help SIA survive and continuously fly the brand well. All the monies look to be available to keep it afloat and succeed. And if you look in terms of business-wise, the brand is not damaged. Right now, it's just the industry facing headwinds. And we never know when things turn. If the brand is not damaged, maybe SIA could one day emerge from this whole crisis a lot stronger than its regional peers. So what are your thoughts? Leave them in the comment sections. I'll be keen to hear from you also. And with that, let me invite you to a previous tutorial I've done on SIA to give you further insights, especially if you're keen to be an investor. So with that, I'll sign off from here and see you there. Take care and goodbye.